Leverage trading, also known as margin trading, is a powerful tool that allows traders to increase their buying power and potentially earn greater returns on their investments. However, it also comes with a greater level of risk, as traders are borrowing money to make trades and therefore have the potential to lose more than their initial investment. In this video, we'll talk about the basics of leverage trading and the advantages and disadvantages of using leverage and how to properly manage the risks associated with leverage trading. The beginning of leverage trading can be traced back to the stock market, where investors would borrow money from a broker in order to purchase a larger number of shares. This allowed them to earn greater returns on their investments, but also put them at risk of losing more than their initial investment if the stock price decreased. Today, leverage trading is used in a variety of markets, including forex, commodities, and even cryptocurrencies. One of the main advantages of leverage trading is that it allows traders to enter larger positions with a smaller amount of capital. Let's look at 5 ways how leverage trading can give you an advantage. First, it increases buying power. Leverage trading allows traders to enter larger positions with a smaller amount of capital, which can increase their buying power and allow them to earn greater returns on their investments. Secondly, you will have the ability to enter markets with limited capital. Leverage allows traders to enter markets that they otherwise would not have been able to enter due to capital constraints. And then as a third advantage, I want to talk about a greater potential for profits. Leverage trading can also increase the potential for profits, as traders are able to enter larger positions with a smaller amount of capital. And then we have flexibility as well. Leverage trading can offer flexibility in terms of investment size and allows traders to adjust their positions according to market conditions. And as a final advantage, the opportunity to earn high returns. Leverage trading can offer high returns on investments, which can be beneficial for traders looking to maximize their profits. The potential for high returns is greater with leverage trading because of the ability to take larger positions with less capital. So in summary, leverage trading can be especially beneficial for traders who do not have a large amount of capital to begin with, as it allows them to potentially earn greater returns on their investments. Additionally, leverage can also allow traders to enter a market that they otherwise wouldn't have been able to enter due to capital constraints. Now, before we move on to the disadvantages of leverage trading, because there are quite enough, please know that I'm not a registered financial advisor and that my videos should not be taken as financial advice. They are meant to be educational and entertaining only. Always make sure to do your own research before investing into any projects. Right, so let's look at several disadvantages to leverage trading. One of the main risks is that traders can lose more than their initial investment. Let's look at 5 ways again where you can lose more money by leverage trading. Now, the first is the risk of a margin call. Leverage trading allows traders to enter larger positions with a smaller amount of capital, but it also increases the risk of a margin call. Now, a margin call occurs when the value of a trader's account falls below a certain level, and the broker will require the trader to either deposit additional funds or sell some of their positions to bring the account back up to the minimum level. If the trader is unable to do this, their positions will be closed and they will lose money. Now, the second one is a greater potential for losses. Because traders are borrowing money to make trades, they have the potential to lose more than their initial investment. And this is because they are required to pay back the borrowed money plus interest if the trade goes against them. Another risk is that of increased volatility. Leverage can also increase the volatility of a trade, which can make it difficult for traders to manage. The larger the leverage, the greater the potential for losses as well as the potential for gains. Now, people try to time the market, and this is another risk for losing money, which is the difficulty in predicting market movements. Leverage trading requires predicting the market movements correctly, and if the market moves opposite of what you have predicted, it can lead to significant losses. The final risk I want to discuss is that of emotion. Leverage amplifies the effects of emotions on trading decisions, which can be particularly detrimental to novice traders who are not experienced in managing their emotions. This can lead to impulsive and emotional trading decisions, which can result in significant losses. So let's summarize this video. You can lose money because you are borrowing money to make trades, and if the trade goes against them, they will be required to pay back the borrowed money plus interest, which can result in significant losses. Additionally, leverage can also increase the volatility of a trade, which can be difficult for traders to manage. Now, in order to properly manage the risks associated with leverage trading, it is important for traders to have a solid understanding of the market they are trading in and to have a well-defined trading strategy in place. This can help to minimize the potential for losses and increase the chances of success. So, Leverage trading is a powerful tool that can potentially allow traders to earn greater returns on their investments. However, it also comes with a greater level of risk, as traders are borrowing money to make trades and therefore have the potential to lose more than their initial investment. Traders that do choose to use leverage should have a solid understanding of the market they are trading in and have a well-defined trading strategy in place, mainly to minimize the potential for losses and increase the chances of success. Additionally, traders should also be aware of the level of leverage they are using and the potential risks associated with that. Right, if you want to learn more about crypto, please click that playlist right there. For now, my name is Rico. Thank you for watching and I'll see you next time. Doei!